Hello traders, Gary Wagner here, just about 10:45 in Honolulu, 4:45 in New York. It is Wednesday, 23rd day of September 2015, and this is the daily report for gold and silver. Nice upside bounce in the precious metals markets today, moderate but to the upside. Gold currently trading up roughly $6 on the day, trading at 11.30. It's seen a low of 22 and a high of 34. So once again, not too much of a range. We are trading towards, call it upper 2/3 of the range, but absolutely trading to the upside on the day. 1129.30 up 450. This is the COMEX contract. Silver also trading higher on the day, but only up between 3 and 4 cents on the day. 0.24% in terms of a raise. You can see that on this daily chart. Very, very slight uptick. Now, the real mover, the real star of the day has been not platinum, which as you can see is currently trading off about 390, but it's been palladium. Palladium just rip-roaring away, up about $37 or over 6% at 648.60. We will definitely look at some palladium charts in a little bit. So traders, we are looking at a daily chart. On this daily chart, I basically have one fib retracement. The retracement, in essence, covers the $100 rally, 1071 up to 1171. I've earmarked certain areas that I believe have real potential in terms of a Fibonacci-based area for support, the primary one being roughly at 1110. There is also one, though, it's not as strong, a 50% retracement at 1121. Now, whether it's strong or not in terms of our Fibonacci numbers, one thing holds true. Over the last 2 trading days, we have seen effectively this low tested twice and holding twice. In other words, yesterday as the market was down, that was the low. It came up the low, closed just off of the low. We had it open, of course, right in that same area, and now, of course, is effectively trading higher. This, in essence, in terms of a candlestick pattern, is simply called a piercing line. It's this 2-day pattern here. You, of course, would not take that without confirmation. Confirmation, of course, would be a green candle with a higher high and a higher low. Would look something like this. So as I said, even with this piercing line, we would need to see absolute confirmation, which would be the following day, meaning Thursday's trading activity to be a strong up day, higher high, higher low. And also a criteria that would be important to me would be to take out this 1133 number. That would signal the trigger to actually issue a buy signal. Now, as you know, my basic format right now or strategy is a belief that we should be able to enter a long position, say anywhere between 1110 and around 1115. Those are 2 fib numbers that we have been looking at. However, if the market does find some support in this area and move higher, that would cause me to raise that basic target of entry to wherever the market is trading if this criteria, of course, was met. Now, interestingly enough, when we take a look at our half-a-day chart, this is a 720-minute candlestick chart, we get a very interesting pattern that is unfolding, and that is a pattern that I'm sure most of you will recognize, which is that 3-river morning star. We do have the criteria necessary to meet the definition. After a defined downtrend, you get a long red candle, you get a star, and then a long green candle. Now, of course, to take that call, just as in the piercing line, you would have to have a confirming candle. That confirming candle would be a green candle, meaning an up day with a higher high and a higher low. And once again, we would look for it to break above this particular resistance area at 1132. So my recommendation for right now is we are going to sit pat. I want to see if we get confirmation of the 3-river morning star in our half-a-day chart. The daily chart has the piercing line, so we want to see if those confirm tomorrow. If they do, we have one action. If they do not, we'll see if the market actually can meander and really move back to that area where I think we would have a better buy, obviously, which is anywhere between 1109 and 1115. Now, traders, as I said at the beginning of the show, we have been kind of looking at palladium on and off. It's just been on a tear. Take a look at this daily chart. First, we can absolutely define the fact that we've been in an up channel and a strong up channel in palladium. No doubt about that. But take a look at the close. The close is effectively at and above the upper end of this channel, which could signal quite a strong breakout to the upside. So we definitely want to look at palladium. Now, here is another chart that we're looking at. It is a daily chart. It does have our Elliott wave count, and it also has a 50-day moving average. We're looking at a daily chart. And here's the key. We did see this market, without a question of a doubt, over the last, call it 3 trading days, and today really take off, but above this moving average. Our forecasting Elliott wave tool is telling us that, well, we've exceeded this. We could see this market go as high as, say, $16.80 to maybe $710 per ounce, and that's based upon our forecasting using Elliott wave. Nonetheless, this is a surprising market, an absolute tear in terms of how the market has taken off. When we do issue a buy signal in gold, we will probably include a buy signal in palladium. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.